Today's March 20th, 2023. Super blessed to be here. It is nighttime now. New York session was a couple of hours ago. Actually, the new trading day has already begun. And so, but here we are, Here we are showing up like we always do and breaking down a beautiful trade. So I'm gonna walk you guys from the top, and I just want to take this moment to show my appreciation to all the subscribers, everybody that is subscribed and is showing consistent love and showing up all the time, week after week, throughout this content. Guys, I appreciate you guys a lot, not only because you guys are tuning in, but because you believe in yourselves enough to show up every single day and take advantage of all of this resource that I'm putting out, all of this information that I'm putting out. Because again, it's not even mine. I'm just passing you guys the information that I have learned over the years, and my goal is to make your trading experience a lot smoother than mine was at the beginning. Shorten that period of between now and your point of consistent profitability, right? So that's my goal with this channel, and I just want to say thank you guys for making that dream come possible. And if I want to take also the moment to ask you guys, if you have any questions, comments, or observations, please don't hesitate to drop something below. I know I don't trade currencies all the time. Maybe I'll start making like a currency playlist where I start trading forex assets. Yeah, there's just different things that we can do. I'm open to ideas from you guys as well. If you guys want to look at something different other than indices, I just think they have the best price delivery currently. So we're gonna dive a little bit more current to this whole year. We're gonna dive really hard into indices all year long, but I'm open to whatever you guys want to see next as well. I want to listen to the community, right? So all right, guys, so mini S&P, right, which is just your SPX 500, except I trade it on the futures market. Okay, and I mean, to be honest, guys, I love S&P. I think it's a really good asset. I think it's really fun to trade, and I don't trade it often. You guys will rarely see it on this channel, unfortunately. Well, maybe, right? Like in the future, I may trade it a lot. So who knows? So let me backtrace that. Currently, I'm not really trading it as often, but when I do trade it, it's because I see some really clean plays. It's like today, okay? So the only times I deviate from my main assets is when the sub asset that I have, which is ES&P or S&P 500, is looking really clean, like picture perfect setups. So I'm gonna walk you guys through that today. We were super bearish on the dollar here in this trend to the downside. We're bullish on a weekly perspective structure wise, but the way we're coming down is bearishness, right? So we're printing bearish candles. I'm anticipating pretty much I'm anticipating the weekly 50% and below right there, to that liquidity point. On a daily perspective, I am looking at this low currently. I did look at it yesterday. By then not yesterday, but previous trading day, so earlier today for me. And we were trading below this low already. So for me, I was super bearish. I know we had taken out this low and we want to see accumulation below the lows, but look at the way we're coming down. Super bearish, barely any bullishness for a retracement, super bearish, right? So I'm looking at the volatility and which side has the most volume, and I'm anticipating more liquidity has to be taken to the downside. Okay, we have a conviction to come 50% and below this whole weekly range, and who knows, maybe even trade back down into this previous area of accumulation. My overall goal is this imbalance here on a weekly, right? So looking at the daily, this is my goal right here. Okay, you guys can back test this, or for those of you looking at it in the future, especially you guys look at watching months down the line, back test this. Okay, price action will be guided by liquidity, because the market, it is my belief that the market is liquidity engineered. Okay, so because we're bearish, I'm looking for this previous daily low here. On the 4 hour, we honestly would look pretty bearish as well. Even during New York here, okay, during New York Open, the stock exchange open at 9:30, we were bearish and we were continuing that trend to the downside. So now turning onto the indices, because we're looking for a bullish day, when we were here during US 30 right there, right before the New York Open, we were trading above the weekly open. We traded below some previous daily lows. We came into a previous area of accumulation, and we had an impulsive move to the upside. So my eyes were really drawn into to this imbalance here, or okay, the current daily, we could just come down like this, because that's the new week opening gap. So there's two options there. For me, my eyes were drawn here, and let's go here closer to the open. There's the open right there. We come back, we miss that area completely. We don't go that low, and we just continue running up, I believe, throughout the whole day. Yeah, we just had a really bullish day, right? On ES&P, because that DXY we're looking for lower price action, on ES&P I was looking for some longs as well. Okay, so now ES&P I gotta stop calling it ES&P. It's S&P 500, okay, or Spooz. We'll call it Spooz. All right, so that's so you guys know the nickname for S&P 500 is actually Spooz. Okay, so we'll call it Spooz. 1 hour was moving to the upside as well, except I like this one more because we did tap into this imbalance after we took out that previous daily low. We did tap into that imbalance, so I really like longs out of here. This accumulation here really made sense out of this imbalance, right? Because we traded in here, came into the previous area accumulation, created a higher high. This is a previous area right here. So that whole candle opening, that whole body of that move up, that push down, that started this push down, that created this insufficiency, and it lines up perfectly with this. So that's why we're looking at that area right there. The 5 minute again looks very nice. This is your breaker right here. We'll call it an OB, but this is your breaker. Okay, right? It swept the low, created a new high, swept all that liquidity, tapped into that imbalance. So that's your breaker with an imbalance right there, right above it. Lines up pretty nicely. So this is what I was basing my entry off of on the 5 minute. Once the open took place, we did go up slightly, and I'll show you guys where I took the L. When we tapped into this imbalance, I believe that this was enough liquidity, but it wasn't. Oh no, wait, it was over here. I believe that all of these lows right here was enough liquidity, and so I took this imbalance play right here. Okay, and as you can see, it stopped me out, but the way I replayed it, okay, the way I replayed this was, once we took out that low, you have to understand, and if you haven't watched my videos about internal liquidity, go to the playlist. Liquidity is the name of the game. Watch internal and external liquidity. Guys, all my content and most questions that you guys may have on all my entries and my trade breakdowns are mostly all already answered on my videos. Excuse me. Mostly everything that I have gone over with you guys on a trade, it's all for free on the course. Okay, on the liquidity is the name of the game and the ABCs of Forex or smart money concepts. Okay, I promise you guys will not be disappointed with that content. It's very valuable information. All right, so now we're trading into this breaker, right? This is our whole range, 50% and below. At this point, we're right here. 50% and below is what? Internal liquidity. This is your internal liquidity right here. Okay, we sweep that. That's why I took it literally right there. I did see this imbalance right here on the left. Okay, and so I put my stop loss after we swept that low I put my stop loss right here. Okay, this is how I took this trade today. Okay, now this is where I took partials. All right, but and I have to get better at doing this. Okay, of course, I see these things and I forget to call them out as I'm walking you guys through this, but you know, of course, we're coming out of this as we did on Dow Jones. We're coming out of this previous daily sweep on the lows right here. I'm doing this backwards and I don't like it. I apologize. Okay, we're taking out this low right here on the daily, and we were trading below the weekly opening gap. So the close and the open right there. Okay, we were trading below that, so I knew we were gonna get some resistance. Okay, I knew we were gonna get some resistance there, but for most part I did see us accumulating below the weekly open. So that's another reason why I wanted to see higher price action, potentially previous daily highs, but most of all it was Asian high that was left alone on an early Monday morning when we were accumulating below the lows. Asian high was open below the weekly low, below previous daily low on a bullish accumulation. Guys, tell me you wouldn't take it as well. Okay, we have that imbalance here. Okay, that was created right there. All right, and then we have that imbalance accumulation there. So this is why I took it again. It still made sense. So again, to that high right there, initial high, it's a nice 125. I did take off 50% of my position there, and I let the other 50% ride to that Asian high. Okay, so I wanted to play re-entry here. I did not. It wasn't something, I was really busy this morning, unfortunately, so I was not able to be on the charts. But it did play twice, so I wanted you guys to see this, the power of imbalances. As long as your stop loss would have remained below the low right here, let's make that red, boom. You know, once your stop loss was being trailed right there, right, move it from here. So we were originally taking a stop loss below the low of the imbalance. Then once it created a new high and this imbalance here, I would have put it below the low of that imbalance. Why? We swept the previous low. The low is pretty safe. So now you're at break even and some in profit. And if you were to enter here, your stop loss staying right here, if you would have just left the charts, didn't endure any of this, a lot of people would have either gone break even way too soon or gotten stopped out, or you know, sold manually back their positions, right? You know, I know a lot of people that would have probably not been able to endure this much drawdown, but price action did its thing, right, and continued to trade to the upside throughout the whole day, right, until we got that Asian liquidity run. And this is the trade that I took today. It was a beautiful trade. I fortunately was not on the charts to take another entry. There was a lot of entries that were provided, right? Very clean price action, and I want you guys to back test it when you guys review this price action, and make sure that you're subscribed with the notifications on, because I'm gonna do a lot of these random videos throughout the month of March, and as we come into spring, we're all gonna spring forward, and I want you guys to affirm this in the comments with me. Okay, go in the comments and affirm with me, spring forward. Okay, I will spring forward. We're going to spring forward together. I'm going to give it my all on this channel throughout spring. I'm going to put out a lot of content. The editing is going to take a while, guys, so be patient with me. Sometimes I really won't edit the videos too much, just to save me some more time and pump out more content for you guys. But again, like, affirm with me, I will spring forward. All right, 2023, spring forward 2023. Drop it in the chat and drop it in the comments. And guys, again, I appreciate you guys for being here week after week, day after day, recording after recording. Thank you guys for tuning in. The energy is amazing. I can feel you guys everywhere. It's incredible. Thank you so much. And yeah, have an amazing night, day, wherever it is that you're tuning on. Clap easy. Peace.